Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this, the 28th day of April, 2020. I do like to remind you every week I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. We focus on the junior mining sector primarily, not exclusively, but primarily, because that's where I think you can go now to do well, to protect your wealth. That's one of the areas, gold for sure, gold starting with gold bullion, but also the mining shares, I think, have tremendous upside potential as I believe that gold will continue to rise relative to many other, if not most other assets. I'll also encourage you to go to chenpicks.com to pick up a subscription to Chen Lin's letter, What is Chen Buying, What is Chen Selling? And Michael Oliver, who is with us today, we like to always remind you of his great service as well. It's olivermsa.com, olivermsa.com. And we do want to thank you for listening to this show, making it one of the more popular shows on the Voice America Business Channel, and also encourage you to continue sending along your questions, comments, whatever you might have to say about this show, good or bad or indifferent. Send it along to questionsfortaylor@gmail.com. Questions, the number 4, Taylor@gmail.com. Our sponsors for today, which we are grateful to because without them there would be no show. Our sponsors for this week, RN Resources, Ely Gold Royalties, Great Bear Resources, Hannon Metals, Irving Resources, Novo Resources, and Sitka Gold Corp. I've titled today's show, Geopolitical and Monetary Impact of the Hunan Virus. Jim Rickards, Michael Oliver, Chris Taylor are my guests today. The lockdown of the global economy resulted from the virus exported from China to the world. It has not only caused a large number of deaths throughout the world, but has triggered a global economic depression that many believe may rival or surpass that of the 1930s. Will the carnage left behind impact the current balance of power, I should say, between China and the United States? If so, what shape might that take? And as the Fed and other central banks around the world print infinite amounts of money, at the same time, supply chains are disrupted by this virus. Might the world be facing prospects for a massive increase in the cost of living? Might the status of the U.S. dollar as the world's reserve currency be in jeopardy? If so, what might take its place? Most importantly, how should each of us be preparing for what seems to be very uncertain times? Those are questions that I intend to pose to Jim Rickards in the second half of today's show. In just a few minutes from now, after our first commercial break, Chris Taylor, the president of Great Bear Resources, will be with me to update us on that company's Dixie project in the Red Lake District of Ontario, where Chris and his team have made what is perhaps one of the most significant new high-grade gold discoveries in recent years. That stock has been one of my best performers of late, and so I'm eager to hear what Chris has to say about how the ongoing exploration work on the company's Dixie Lake project is progressing. But before we get to Chris, I'm happy to tell you that Michael Oliver is here. Michael's one of our more popular guests on this show, so thanks for joining me again, Michael.
Hi, Jay.
It's always good to have you, and as one of our listeners suggested that we should have you on more often, we got an email from this listener named Greg, and he said the following. He says, is there any chance getting Michael Oliver on your show and finish your discussion? He talked about this. He talked about some of the states leaving the union and no further taxes because of money printing. I think you need to have him on a lot more and give him more time. Now, maybe you'll recall your remarks, Michael, but I think that you have some real profound thoughts about what's happening in the markets and how that may affect civil order or perhaps civil disorder, unfortunately.
Well, it's a broad situation, and it's coming together rapidly. First off, a little background on me as to why I think certain ideas outside of the specific technicals that we analyze.
Sure.
My background's philosophy, not markets, and I was heavily influenced in high school by reading Atlas Shrugged, among other books by Ayn Rand. And I frankly think right now that for those who've already read the book, we're in the section of the book right now. There are three major sections. The third section is entitled A is A. And what happens in the third section is after decades and decades of statism and collectivism and all the errors that are compounded by that political, philosophical bent, it finally comes undone because it's not in tune with reality or with man's nature. And therefore all kinds of chaos ensues as the unraveling occurs. And it doesn't occur incrementally, it occurs rapidly, like chaos theory, instead of an incremental march up and an incremental march down, sometimes you get crashes. Mm-hmm. Well, not just in markets, but in social political events as well. And I think we're there. I think we're on the edge of it. I don't think it's reversible. And to some extent, it's reality justice. But there's all kinds of things going on outside the markets right now that will cause, of course, the central bank to go absolutely berserk. The OJ has gone berserk already. They said we're going to buy infinite bonds. Doesn't matter now. There's no limit anymore. They changed the rules. I'm sure the ECB will go along, and I think Powell will go along. But aside from the virus, which no doubt will pass at some point here soon, and cease to be the clear and present danger that everybody makes it out to be, and it may come back in the fall type of thing, but the problem is that it revealed certain things under the surface. Major debt problems, both government, corporate, municipal, state, personal. Certain unemployment problems, such as people having jobs later in their life than they expected, but they got a job and therefore they show up on the employment rolls as opposed to unemployment, still having to work when they're 65 or 70. Problems now with pension funds being funded. Problems now with state governments being able to pay unemployment checks. We're very close to that crisis. And they can't print their own money. So there's this debate going on in Congress now about whether we're going to fund them or not fund them. And the answer, of course, is they will fund them. There's no issue about it. Otherwise, you'll have violence when people don't get their unemployment checks after a while. So there's all kinds of things like that going on. Also, it's long been my view that secession, after all, the U.S. isn't what it used to be anyway. It grew, it accumulated states, it began from nothing. It could go back to fragmented as well, not just on political grounds, but economic grounds. Recently we've had a couple of examples of that. They're very subtle, but I think they indicate the revelation of this trend and probably the use of the word secession at some point. Gavin Newsom, governor of California, has declared California repeatedly over the last month in various speeches to be a nation state. Mm-hmm. Not an accidental statement. He's repeating it, and I think with intent. California, Oregon, Washington have sort of unified in their rebellion against what Trump is doing on the medical issues and so forth. We know that's in the news. Also, up in the Northeast, we have New York, Pennsylvania, Delaware, and various other states, all there, that mostly run by Democrats. But they're rebelling against federal power, which is kind of interesting because liberal bias is generally against states' rights, if you know what I mean. Yeah. Mm-hmm. They like the unity, and now they're actually rebelling to the point where Trump says, I'm not going to let you get away with this, so you can't be independent. And he even mentioned the Mutiny on the Bounty movie. Yeah. He's the cat. Okay. But underneath the surface in these various events, pay attention, because fragmentation is going to occur, political, and not just statewide. It could be county-wide. Mm-hmm. I know, for example, there's a county in Colorado, biggest county in the United States in terms of size, Weld County. Mm-hmm. And it's also a major oil and natural gas-producing county in the state. In fact, the biggest source of income for the state comes from that one county. Of course, now that county is probably in some trouble with the collapse in the oil industry. But back in 2013, the county commissioners actually discussed the issue of secession because they felt they were being exploited on a tax basis by Colorado. That their money was being contributed to the pot, but didn't come back to Weld County. They began to discuss it again in 2018. Now, I'm sure there's other counties around the country that, based on this issue or that issue, are not happy with the state they're in. For example, West Virginia has invited some of the western counties of Virginia to join West Virginia. Mm-hmm. Part of the issue there has been the gun control laws coming down from the state capital in Richmond. Right. And so there's all kinds of points of fragmentation that are being exaggerated and brought up to the surface by these events, economic events, that have yet to reveal themselves. I don't just mean the unemployment, but think about it for a minute. You have this rally recently in some very limited number of the Internet and tech stocks. Some made new highs, like Amazon. Most didn't, but they were strong. Okay, very narrow number of stocks, like 5 or so. Meanwhile, the auto industry has already been in major decline, not just in stock market, but in data points for the last couple years. And now they're facing a depression. The oil industry is now in a depression. And our technical work on oil suggests that, well, yeah, you can make a low in oil here that may last forever and make some money on the upside. You're not going to get oil prices up to levels that will reverse that negative corporate situation for a lot of these companies. So you may rally oil up to the mid-30s, upper 30s. We think that's entirely possible over the next year. Those still aren't levels that are breathable. Mm-hmm. And there's other industries, Boeing is in big trouble for other reasons. But a lot of events are going to happen and trends are happening that won't be reversed by any near-term betterment than the virus issue.
Right.
Trump's argument that, we're going to go, is it going to take off again? It's nonsense. First off, we we weren't where he thought we were in the first place.
Exactly.
We're sitting
for
on
sure.
top of an 11, 12-year-old bubble financed by central banks, both here, Japan, and Europe. So it wasn't, quote, his economy. Well, most of that bull market occurred under Obama. So what do we call it, the Obama bull market? No, it was a central bank bull market.
Right, exactly.
So anyway, a lot of these big events are happening, and I think gold is going to be a huge beneficiary of this. And I think gold miners are going to be on top of that. Go ahead.
I have to think so. I have to think so, Michael. I want to ask you though, how does GDX look to you now?
Great. XAU as well. GDX, momentum-wise, the miners are in great shape. We thought the sell-off in March, it was a 3.5-day sell-off, by the way, if you go back and examine it carefully. It was a collapse. Mm-hmm. The gold mining investors thought, we're part of the stock market. Oh, my gosh, we're going to go down with the stock market. And they did. But they created a bear trap, trapped themselves, and the market V-bottomed out of there. Next thing you know, you're in new highs for the last 7 years. All the highs have been 31 plus, 31 plus, 31 plus for the GDX. We reached 32 2 weeks ago. Now we're trading 34. Mm-hmm. XAU didn't quite get that breakout 2 weeks ago, but it got it last week. Comparable. 7 years of highs taken out, flat highs. I think the gold miners now are being perceived, and look at their daily tone as well. If you look at the action, gold drops $10, $20 intraday. GDX hardly flinches now.
Yeah. Yeah.
It tells me that big investors, fund managers, are getting into this area. After all, what do you have? You have a rising commodity that they produce, and it's at high levels, historically versus any currency, nearing its old high of 2011 in the U.S. dollar terms. And they have the lowest energy prices, which is their main cost of production.
Exactly. All right, Michael, we're just about out of time. Let me quickly ask you, with regard to the equity market, you've long held that in order for the bull market in the gold shares and everything else, of the gold shares and gold itself, to really explode, you think we have to see money coming out of the equity market. And, of course, equities, they're hanging in there pretty well. I mean, technically they look weak, I believe, from your work. But nonetheless, what do you see for the equity for the S&Ps?
I suspect either soon or maybe it'll take a few more months. After the 29 crash, it was like a 6-month rally. Yeah. And even Herbert Hoover declared what Trump declared. It's all over. A rollover, but I don't expect any more panic in the rollover. If the stock market rolls over and goes for a wipeout, which like the dot-com bubble did, or the 29 market did. It took it 2 years, and it was never a crash after the first crash. It was an incremental arm-wrestling bear market with nice little rallies that didn't mean anything, but they effectively took price to zero. Not quite, but you know what I mean. When you take the Dow from the upper 300s, like in 29 to 40
yes,
in a couple of years, that's a wipeout. Same with the dot-com bubble. So that's what we're looking for, and we're trying to time an intermediate rollover that indicates that this rally is spent and over with, and so far we're not there, but we're seeing some evidence of it.
All right. Well, I should tell my listeners that you provide ongoing ongoing information along these lines with multiple markets, many different markets, and you keep people really up to breast on your momentum work, which really usually leads the equity, the prices. So, Mike, I want to thank you so much for spending your time with us again. Always valuable to have you with us, and we'll look to check in with you in a couple of weeks again. Thank you so much.
Thank you, Jay. Thank you.